This is another part, or let's say the second part of the first video that I made. Now, let's okay. So the last thing we talked about was leverage, and you were like it's something like a multiplier, something that scales your account when trading. That's why you are able to trade with $10 and all that. Okay. Now we are coming to talk about some um strategies, myths, and then a whole lot about forex. So this year is asking what is hedging. Now, hedging is a term that is used to refer to buying and selling at the same time on the same account. Right. This strategy, I would say, it's risky, but then if you really know what you are doing, you can use it to your advantage. We have forex trading robots, right? We have forex trading robots, and then most of them have this trading strategy, and they can really multiply your account balance. But as a human being, hedging is I wouldn't say bad, but you can't really control it because it's a scalping strategy, right? And then after this beginner's course, the strategy we are going to learn is not a scalping. It's a scalping strategy, right? But then it's not a scalping strategy. It's an intraday trading strategy or a day trading strategy, whatever you call it, right? So this is mainly used by some forex trading bots, but traders who use these are pros, and then they do that because it works for them. It doesn't work for everybody. Now we move on to the myth surrounding forex trading. Let's see. So this was the hedging I was talking about. The person is in a buy trade and then a sell trade at the same time on the same account. Right? And as you can see, since both of them are not in profit, he's really low on um, how do I put it? He's in a loss right now. He's in a floating loss right now, and then because of the counter trading, his loss is big. But then if you had to look at each of the position, it would have been smaller as compared to the total floating loss, right? Okay. Now, this is another outcome of hedging. When one trade is in profit, obviously the other one is also in loss. But then there are situations where, like I said, the pros they really know how to use their hedging strategy, so they can enter in such a way that they'll be in profit on both positions. Those are the pros, and that's not what I teach. I don't teach hedging, and I don't encourage hedging. Hedging are meant for trading bots because they can stay on the chart 24/7 every single minute because you install them on the chart to do so. Now, how to open a forex trading account? With this one, I'll make a video on my phone and then show it because in this PDF, it's it uses MT4, but I recommend MT5 because it's user friendly. Um, Whatever be the case, the registration is simple. You select your broker and then you download your MT5. After creating an account with your broker, just follow the prompts here. I'll make a video on how to how to link your MT5 to your broker. Right. Let's try and skip to the important. Uh, okay. The reason why I don't recommend MT4 is that everything has to be done manually. When I say manually, you have to, after entering a trade, you on MT5 you can just tap on your trade and then set your stop loss and you take profit. But then on MT4, after executing your trade, you have to go back and then, yeah, manage trade and all. It has been a while since I used MT4, so I don't really remember. Okay, I think yes, 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 yes. That's how to enter a trade. So you select your pair, you do your analysis, new order, right? Either whether buy or sell, you enter your position and to set is either you close it manually. This is the manual close. If you are to set your take profit and your stop loss, you go to your modify order, right? Then you set your stop loss and then your take profit, and you are good to go. These are the myths. Some of them are not really myths, but they are considered myths because that is what pulls a lot of people to the market. Now, FYI, um, according to statistics, right, there's between 90% to 99% of people who try forex failing, and then there is 1 to 10% actually succeeding in the market, right? Okay, so let's move on to the ones we have here. Forex can make you rich quick. It depends, right? If you have a working strategy, you have a nice win rate, and then you have the best scaling, you know, how do I put it? The best scaling method. Scaling method as in how you grow your account and all that. It can actually make you rich. Not quick, but it can make you rich. The forex market is rigged. It is not entirely true. There are times where market makers will manipulate the market. That one is true. There are sometimes where market makers will manipulate the market. There are sometimes where politicians, I mean the US politicians, or depending on the currency you trade, the politicians in that country would make certain comments or implement certain policies and all that to just cause chaos in the market. I don't know if you guys follow US news as with their stocks and maybe crypto news or something, but there are times when Trump will come out to release a statement and then the market has gone wild. It's either the crypto market wiping out millions and billions of dollars or the stock market crashing. Right. Okay. Now the markets move in a predictable, scientific way. It is not true. You do your technical analysis, you read your fundamentals. When I talk about fundamentals, it's basically the economic news release, right? Like the unemployment rate release, the PMI, that's product manufacturer index or something, the CPI, consumer product index, and FOMC. I've forgotten the meaning of FOMC, but all those economic news releases can change whatever you are predicting, right? So in order to succeed in forex, you just learn your technical analysis, right? You your fundamentals, right? Now to the fundamentals part, people will recommend that you read your fundamentals and understand it, but to me, sometimes it's actually a waste of time. When we get to the strategy trading or the part where I explain my strategy, I would explain everything I talk, every comment I make about my strategy. Right. Okay, now to the next one. Says what the experts know best. Experts always win. There's nothing like experts. We have pro traders, yes. the fact that they are pros don't mean they always win. So if you are taking their signals, you don't count on it 100%, right? The reason being that they also make losses. The market doesn't always move as you predict it. I mean, there are certain period of times where you can be hitting take profit all the time, but it doesn't mean the market is always going to go in your direction. Those things happen to me. There are times when I can hit a losing streak for like a week. There are times I'll hit a winning streak for like a week or two, right? It's not always that the market will go according to your way. And then experts, I wouldn't really call them experts. I would just call them pros. The fact that they are pros doesn't mean they are experts. Let's see. Opportunities in Forex. No, it doesn't. Now, there are three types of market analysis. I already made mention of two of them. That's the technical analysis and then the fundamental analysis. Now, with what after this beginner's course I'm going to teach you is the technical analysis, right? I don't trade fundamentals, but then the fundamental analysis has to do with the economic news releases, like I said, the FOMC, the CPI, the NFP. I remember some of them, their full meanings, so I'll be mentioning them, but there are some I also don't remember. So, when is NFP is non-farm payroll, you can search for them. I mean, I'm not always correct because I don't trade fundamental analysis. I don't make fundamental analysis and I don't trade fundamentals. So you can always search for them. So NFP is non-farm payroll, CPI is consumer product index, PMI. No, it's we have PMI and then we have PPI, right? We have FOMC, like I said. There are a whole lot of them, ADP or something. Right. Let's skip to the next one. And you have sentimental analysis. Sentimental analysis basically has to do with your psychology, your discipline, how you the rules you are able to set for yourself. Maybe maximum of 3 trades per day, or maximum of 2 trades per day, or I'm only going to risk this amount for today, or I'm going to make this amount for today. Not making this amount for today is kind of too much. But then I'm going to the only permitted loss for the day is this amount. I'm going to risk this for the day. It's part of your sentimental analysis because you're able to follow your trading rule, right? As as a trader, you're supposed to set for yourself rules. If you don't have rules, you're not disciplined. When you're not disciplined, you have a problem with your psychology. Right? So the technical analysis has to do with the strategy that you trade, right? Be it ICT, SMC, supply and demand, support and resistance, right? There are a whole lot of trading strategies. Okay, I've already explained these types of charts. We will be using the candlesticks chart, so I don't think I have to explain the types of forex charts. So this is the line chart, this is the bar chart, and then the famous one is the candlesticks chart because those are actually the easiest to read, right? This one is giving me a black and white something, but then let me see. Okay, so here, let me try and do something. So the green ones are called the bullish candles. The green ones like this are called the bullish candles, and then the oh, the red ones are called the bearish candles, right? Now, when you take every candle, let's take this bearish candle for example, this one. We have uh, we have for bearish candles, they move downwards, right? So we have the opening of the bearish candle, which is here, right? The high of the bearish candle, which is this wick. Okay, let me name the parts for you. So we have the body, we have, if it's a bearish candle, we have the open, we have the close, we have the high, then we have the low, right? If it's a bullish candle like this one, this is the open because bullish means up and then bearish means down. Bullish also meaning buys and then bearish also meaning sells. Oh, so for bullish candles, this is the open, this is the close, this is the high, and then this is the low. The high and then low are always at the same part, but then depending on whether it's a bearish or bullish candle, the opening is either above or below, right? Think it's exceeding the time I set for myself, but let me try and explain something for the last. So yes, the candlesticks are a bit easier to read. So I would explain the rest in the next part, even though we won't be using it. Okay, so see you.